I want to show you guys what it feels like and what it looks like to take the guessing out of trading. Like I said, lean on the moderators, lean on us to provide you guys with our analysis on where we think the markets are headed, where we find opportunities in this market, because this move to the upside over the last 3 days, we've been on top of. Now, if this is not your first time on a True Trading Group live stream, you'll know that since Tuesday and Wednesday of last week, I came on this very same YouTube channel and I told you very specifically, we are set up for a bear market rally. This is not a surprise to us to see the market move higher. I came on YouTube on this day and again on this day and told you we were set up for a bear market rally. And you guys can see the market has just been nothing but absolutely explode for the last 3 trading days. I have a quick video clip from, this is our live stream from last week. This is from Wednesday's live stream where I told you specifically we are set up for a bear market rally and have very specific reasons for that. Let's go ahead. It's a quick 1-minute clip, guys. I'm going to play this for you. This is from last week's live stream. Let's go ahead and play that clip. Now I'll take you to a daily chart now of the SPY and just kind of go back through this with you guys. Ever since you had, the banking scare, right? Ever since you had the banking scare, the markets have been choppy, up and down and up and down and up and down. And here we are back up. If I'm correct in my analysis, then I believe over the next couple of weeks, this market's going to move to the upside. And I think we can move to the upside on the back of banking fears easing, inflation continuing to come down, and the Fed, anticipating the Fed pausing. That takes markets higher over the next couple of weeks. April is also historically a good month for the stock market. Now, that's just historically. It doesn't necessarily mean anything other than that. But you have seasonal strength. You got a couple of fundamental catalysts lining up, and you have massive over positioning on one side of the market. That is the recipe of a bear market rally. Those are the things you need to experience a bear market rally. Look at this. Look at Woody's comment. Woody says, Mike, thanks for the analysis. I bought SPY calls for Friday's expiration on Thursday at 17 cents. I sold them for a final take profit of 590%. Woody, that is absolute insanity, my brother. Congratulations. That's a big time win there for Woody. Congratulations, man. But this is the analysis that members in True Trading Group get on a daily basis. So that's what I'm saying. This bear market rally is nothing that surprised us. We've been on top of this. We've been positioned net long for the last couple of days to make money from this push in this market. And I got to be honest with you guys, I don't think we are done. I don't think that the markets are done going to the upside here. I think that there's going to be a little bit more room. Okay. I think there's going to be a little bit more room here to the upside. Futures are starting off slightly red. We're down, just under, let me do a quick little check here on my futures market. We're down just around like 0.3%. Well, we're moving higher actually right now, 0.2. We're down 0.2%. So the markets are taking a little bit of a breather here, but I still think there's a little bit more room to the upside. Markets positioning was extremely one-sided. You had, the highest level of short exposure that we've seen over the last 10 years. You had almost a near record high over the last 10 years of leveraged short positions. And all you needed was a couple of positive catalysts to go in our favor. And you were set up for a short squeeze and you were set up for a bear market rally. And that's exactly what I think that this is. What were those 3 catalysts? If you guys watched that live stream and you were on our live streams last week, the catalysts were as follows. The fears of the banking crisis start to ease. That's exactly what has been happening over the last week. There wasn't another domino to fall. Everybody was worried about First Republic. Everybody's worried about PacWest. They're worried about Western. A lot of these other banks people were very concerned about 2 weeks ago, 3 weeks ago, but they've kind of stabilized. And that brought a big relief to the markets and allowed the markets to begin to move to the upside. And then you had inflation continuing to move to the downside. PCE inflation data came down, was slightly under expectations. So that is continuing to work in our favor. And now the markets have come to the realization that the Fed is in the 9th inning of their rate hikes. Maybe there's one more 25 basis point hike to go in May, possibly a pause in May. They may not. There's no Fed meeting in April. They might pause in May. There might be one more 25 basis point hike. We have to see what the data shows us because they get a whole month of April where they don't have to make a decision on rates. So they can absorb all of the economic data that comes out in April, all the inflation data, all the jobs data, and they can make a decision then in May. So maybe a pause, maybe one more 25 basis point hike. We'll have to see what happens. And as we get closer to the May meeting, I'll go into a lot more detail about what I expect, but we have to see what's the data from April 1st before I feel comfortable making a high conviction call on what the Fed's going to do here in May. But all of those three catalysts converge to give you a situation where the market's caught off sides. Everybody was so bearish and so negative after Silicon Valley and Signature Bank failed. Then UBS had to buy Credit Suisse. Everybody was waiting for that next domino to fall, and everybody got very heavily short. And the markets were positioned to the short side much higher than they usually are. And that's the perfect recipe for a short squeeze. That's the perfect recipe for a bear market rally. You heard me talk about it on the live stream from last week, and that's exactly what you've been seeing these last couple of trading days. Not a surprise to us, because I've seen this before. Bear market or bull market, stocks don't go up in straight lines. They don't go down in straight lines. And being on the right side of that flow in the market can help you stay in the best possible money-making opportunities on any given day, whether you're a day trader or if you're a swing trader, if you're in front of your computer all day, or if you're working a busy job and you guys can't even be in front of your computer and you're just looking at your phone every couple hours. Being on the right side of the market, saying, hey, listen, I think over the next 1 to 2 weeks, the market's going to move to the upside. Fantastic. If we get that analysis correct, you look for longs. You don't try to short stocks if the market's pumping to the upside over the next 1 or 2 weeks. You want to be looking to buy stocks. Go long, strong stocks when markets go higher. Go short, weak stocks when markets go down. And we will give you that guidance. We will give you that analysis, not just myself. It's 9 other professional traders that are with you during the day. We all give you our analysis. We all give you our thoughts. It's a lot easier to swim downstream than it is upstream. Being on the right side of that market is what will help you be in the best possible positions to profit on a consistent basis. I'm not talking about a one-hit wonder where all of a sudden you catch some mother of all short squeeze, and you make a bunch of money one time and then you just proceed to just lose it all the next couple of months. No, I'm talking about making money in this market week after week, month after month, year after year. That is our goal. That is everyone's goal. And that is exactly what True Trading Group members are able to achieve.